Hello again, WestJet Pilots and other podcast listeners, and welcome to this edition of PIREP, the WestJet Pilots podcast. My name is Captain Desmond Jordan. I am your host, and we are back here in Toronto again on the 25th floor of the CAAT building to discuss a little further the information regarding our pension plan. As you guys have mentioned as pilots, it's gotten back to us. It's very important to you, and you are looking for lots of information, and it's our job to make sure that you get it. To help us to that end, we are joined again by our subject matter experts, Clayton, Gossen, and Dan Bernier, and also, quite thankfully again, by the CEO of the CAAT pension program, Derek Dobson. Welcome to all of you here again today. How are we all doing today, gentlemen?
Excellent. Thanks for having us.
Good.
Thank you, Desmond. Glad to be here again.
Yeah, likewise. Happy to be here.
And we are happy that you are all here. So what I think we're going to do today is we'll just start with a recap of some of the information that we touched on in the previous podcast. So remember, this is the second in two podcasts pertaining to pension information. So we'll just kind of go back and touch on some of the basic information that we disseminated in the first podcast, make sure that we all kind of have a good foundation or basis to start as we move into some more granular details of the program. Okay, so Derek, if you're all right, I'll just launch right into it and I'll start asking you some basic questions. Could you explain to us again, what is CAAT?
Sure. CAAT stands for the Colleges of Applied Arts and Technology. That was our foundation when the plan started 50 years ago in the Ontario college system. Since then, we've opened up the plan to all industries across Canada, and now we have over 20 industries and 100,000 members participating in the pension plan. I'll mention a couple things. CAAT is one of Canada's highest performing and most sustainable pension plans. And we also are a not-for-profit pension plan. So all of the $20 billion in our pension trust all must go out to member benefits. So it's a very different type of pension plan from a traditional single employer pension plan or compared to a target benefit pension plan.
You threw out a number there, which I think is pretty important, but I'll just ask it for clarification. What is the value of the assets under management of the CAAT plan?
Sure. Currently, so at January 1, 2024, the plan had more than $20 billion in assets for our members.
A substantial sum of money. Could you just touch on a little more specifically, what type of a pension plan is the CAAT plan?
Absolutely. So legislatively, we're what's called a jointly sponsored pension plan. So what is that? That means it is a defined benefit pension plan with an upside. So that's the plus in DB+. So essentially, members are earning, as they contribute to our pension plan with their employer contributions, they're earning a predictable lifetime income for as long as they live with inflation protection enhancements, survivor benefits, etc. And that money can never be reduced. Once a pension is accrued or earned, it is locked in. It's going to be paid to your members no matter what happens with investment markets, no matter what happens to your employer. That pension is going to be paid to you for the rest of your life.
Good, solid, secure information. Could you just expand on how CAAT is partnering with the WestJet ALPA pilots in order to help them with their retirement?
Absolutely. So after working with ALPA on a very rigorous and thorough RFI, request for information package over many, many months, we all came to the same conclusion that CAAT and DB Plus would be a great fit for the pilot's needs. So essentially, we're working very closely with ALPA to make sure that the members will get the information they need to feel as secure as we all do that this is a good fit for the pilots. So a lot of the provisions that exist in your current program are being replicated or copied into the DB Plus program. For example, the 10% employer contribution continues. It's going to come into DB Plus, be redirected to DB Plus starting January 1, 2025. But because of our jointly sponsored pension plan structure, as I mentioned previously, we do require some amount of member contributions from a legal perspective. So that's the one difference, is that now members will be paying 1% contributions on their pensionable earnings. And the good news is that's also tax deductible.
Okay. So just to be clear, that additional 1% that the pilot is actually paying, that is a matter of a legislative requirement. Is that correct?
That's right. And the 1% is not going to defray any of the employer obligations or costs. This is going to build more pension than you would have otherwise had.
Great news. So in the discussion of pension plans, we hear about DB, defined benefit, and a TB, target benefit. Clayton, could you touch on possibly what the difference is between those types of plans and how we were able to come to the decision to join a defined benefit plan?
Thanks. Yeah. So there has been a lot of target benefit talk in the last few years because some of our colleagues have joined a target benefit plan, and we have looked at target benefit plans, and we've talked about them in the flight deck. But through our RFI process, CAAT was the clear winner for us, and CAAT is a defined benefit. So the pension you have at 65 is guaranteed. It won't move up or down like a target benefit can do. So that's quite a significant difference. It's locked in, whereas target benefit, it can always move down as you age.
Okay, so it sounds like the DB is a better plan, and we were able to secure that for our pilots.
It's more than better. It's
Okay.
great.
Dan?
Yeah, just to touch on that, when a pilot is using the CAAT calculator and looking at their pension, they'll see that every year an accrual is gained. So let's say you do one for 2025 through your first year as a member of CAAT, you've gained X amount of pension. That money is in the bank, and that cannot come away under any circumstance. Derek touched on it, but even in the worst financial conditions, that money is yours.
Okay. You mentioned using the CAAT calculator. That link will be associated to this podcast, and it was also associated to the last podcast. And if you reference the prior podcast, there's also kind of a step-by-step process which you can walk through and do some ballpark calculations for yourself.
Yes, and we're excited to eventually unveil the CAAT customized calculator for the WestJet pilots, where a pilot should be able to enter their age, their anticipated retirement date, and even their estimated date of upgrade. So it'll be a great calculator for an FO to put out a projection. Maybe I'll upgrade in 2 years, 5 years, 10 years, and get different estimates based on that.
Get an opportunity for them to get a more clear picture of what this might look like for them and for their financial futures. Moving forward, back to the ideas around the CAAT pension plan. If I could ask some specific questions about the plan, Derek, maybe you could touch on this one. One of the questions we had come in was, do the contributions go straight to the pension now, or due to potential management costs, is that reduced?
Every single dollar of contribution that comes in, whether it's from you or from WestJet, all goes to your pension, 100 cents on the dollar. So there's no costs or MERs, management expense ratios, that members will see.
So the fund boasts a 9% earnings over 10 years. What does the actual percentage apply to the plan versus what percentage is kept as a management cost?
So as a not-for-profit trust, I'll also mention that all of my staff, including myself, are all straight salary, no bonuses, no commissions, whether you join or don't join. So we're really out there trying to make sure we're giving the best pensions possible to many Canadians. So our expenses do come off the trust fund, but as a not-for-profit, we try and minimize those. So more goes back into our trust fund, which means we can grant more and more enhancements. So to stay healthy over the long term, we really only need to earn about 4.9% per year. And over the last 10 years, our average rate of return has been 9.3%, which has added more and more surplus, which means we give more and more benefits back to our members.
Clayton, here's a question I'm going to throw to you because it's more, WestJet specific. If you end up on STD or LTD, can you still contribute the equivalent of the company's 10% to the pension?
So you will be able to contribute while on short-term disability. We are still actually meeting with WestJet to finalize the terms, but the terms will be exactly what WSP is. In WSP, you contribute for short-term disability, but in long-term disability, you do not.
Okay. So, Derek, I'm going to throw this question back over to you. It is in regards to the ability to buy back time that they did not have in the pension, i.e., I'm an individual, or there might be other individuals who are joining this pension plan later in their career, but they would still like to take advantage of the benefits that it offers or would offer if they had a longer career at WestJet. Is there a mechanism for an individual to buy back in?
Absolutely. So the CAAT plan believes in making maximum flexibility for members to try and purchase additional DB Plus pension. So the only constraints are really, does the income tax allow it? So the Income Tax Act allows a lot of flexibility to buy back, for example, the service you have with WestJet before the CAAT pension plan joins, so before January 1, 2025. And we do offer, and we will offer, very detailed buyback sessions for members after the effective date. So once all the members are enrolled, they have their member number, we have their data and information, we'll be providing some detailed sessions that members can join and sign up for.
Okay. I also noticed something in the welcome information about a program called Growth Plus. Could you explain and expand what that actually is for us, please?
Absolutely. So we're very excited about this new offering for CAAT members and for members like the pilots who are going to be joining later on. In Q4 of this year, we're going to be providing all of our members the option to basically earn the CAAT rate of return on a go-forward basis. So invest alongside the pension plan in addition to the DB Plus pension that they're currently earning. So some members might take all or some of their RSP balances from prior employment or with WestJet and move it over into Growth Plus. So instead of having a Manulife account, you'd have a CAAT savings account, registered savings account, and earning the CAAT rate of return. So it acts very much like a personal RSP. It's voluntary, it's optional. It just provides you another opportunity to work with CAAT and get access to our investment return.
Dan?
So if I had my own investment guru, or I have a air quote investment guy, as a lot of us do, and maybe I haven't been super happy with the performance, would this be an option for me to move my money or those funds into the investment expertise of CAAT?
Absolutely. So we have 100,000 members in the pension plan, and over 40% of them have asked for us to launch this product. So that might be true for pilots as well. Maybe 40% of your pilots would like access to it. Because we're not for profit, because they can benefit from asset classes that you can't get as an individual, like private equity, infrastructure, real estate. This is what CAAT is invested in, and now members can get access to the benefits of that asset mix at this consolidated, institutional, professionally managed pension plan.
Great. So I'm currently paying my investment guy half of 1%, 1%, maybe 1.25%. What's the cost to a pilot who wants to use the Growth Plus?
So when we start at our CAAT net return, which I mentioned the 10-year average up to the beginning of 2024 was 9.3%, there's no additional cost from an investment side, but there is an admin charge because we have to treat it separate, and that's going to be 0.3% or 30 basis points. And you've already referenced some of the bigger admin charges and investment charges that individuals face. So this is very market competitive for your members.
That's a great option for us. Thanks.
And 0.3% is actually quite affordable. I know from experience speaking to some other people that depending on the size of your portfolio, the more money you have, the less fees you pay. So this would be, as I see it, a good opportunity for somebody who may not be above the $1 million mark, or who might just be starting in their investment, to really have access to high level investments at a much lower cost. So that seems like a sizable advantage.
Absolutely. And I'll just mention one more thing about Growth Plus. You can keep your account growing even after you retire. So there are tax rules where you start after withdrawing it, but you can earn the CAAT net rate of return for your whole life.
Again, great information, and something that guys will have to discuss with their financial experts. While we're on the subject of retirement, a question regarding that. Can pilots retire early?
Absolutely. So the plan is designed to give our members as much flexibility as they might need, and people are very different. So in DB Plus, members can retire as early as age 50. There is an early start adjustment, but it is subsidized, so you're actually getting more value out of the pension plan. We also know that some people like to work a little bit longer, and even if you don't retire, if you don't quit your job, you will start receiving your pension when you reach age 71. That's required by the Income Tax Act.
So Derek, if a pilot wants to retire early, say age 55, I know with all plans there is an early retirement penalty. What does CAAT do for this?
CAAT has a what I call subsidized early start adjustment. So let's take, for example, Canada Pension Plan. For each year you retire before age 65, your benefit's going to be reduced by 7.2% per year. Where at CAAT, it's 3% per year. So that difference between 3 and 7.2 is the subsidy. So for every month you're getting additional pension, you're starting early, it's actually better value for the members. So the early start adjustment is 3% per year instead of 7.2.
So if Canada Pension does 7.2% per year, I know a lot of pensions do 6% per year. How is CAAT able to do 3% a year subsidy?
So essentially, we've decided that members should not be fully penalized for retiring early. Sometimes things are outside their control, like the health of their spouse, their own health, etc. So our plan governors, our board, has decided that we were going to subsidize early retirement. So even though you're getting 10 years more pension payments, we didn't think that you should have your pension fully reduced on an actuarial equivalent basis to pay for that. So we're partnering with our members to, like an insurance program, to make sure that we're covering them in a whole bunch of life situations.
And do you have any advice for the pilots who want to retire early but just feel like they cannot pay the subsidy?
Of course, members, so let's say they quit working at age 57 and they have other source of income, they've gone to another profession, they can always, what we call, defer the pension and wait to collect it till age 65 and avoid that early start adjustment.
And during that time, this example was a age 55 retiree, their pension, to confirm, it'll continue to grow for that 10 years as well as not taking any penalty?
That's exactly right. So the pension will continue to get increases related to the consumer price index during what we call the deferral period. So from age 55 to 65, the pension they've earned up to age 55 will continue to grow with CPI.
That's a fantastic feature.
So another question along the same vein, Derek. With pilots working longer these days, how long can a pilot actually work before, or an individual have to actually work before they have to start drawing on that pension?
So from pension plan rules perspective, the Income Tax Act allows people to continue to contribute and earn pension up until the age 71. So essentially, theoretically, members could continue to work and continue to get a higher DB plus pension all the way through to age 71.
And if they had deferred their pension, could they defer till age 71 as well? Is that the point they would have to start to take that pension?
There's no financial benefit for deferring past 65. So if you've stopped working before age 65, then I would start collecting your pension at 65 because it doesn't increase past 65, so you might as well collect it even if you're still working somewhere else.
Okay. So one of the questions that we get is whether or not the CAAT plan has any protections for price increases in the future after people retire, things along the lines of indexing. What are the strategies that CAAT has to deal with that?
So keeping the purchasing power of your pension is very important to the CAAT pension plan to protect its members. So it's been a key feature of the pension plan since 2007, offering what we call conditional inflation enhancements. As long as we have $1 of surplus, we're going to pay that. And we have a perfect record since it was introduced of paying it each and every year, including during the global financial crisis. And when we look at our asset liability modeling studies, it looks like we're going to have a 100% probability of paying it for the next 20 years. So it's a benefit that members can count on for the next 20 years or so. So essentially, it pays 75% of the year-over-year increase, but in the cost of living index, which is also called CPI.
Another question that is of significant importance to our pilot group is survivor benefits and what survivor benefits are available with the CAAT plan. I was wondering if we could just drill down a bit more to a granular detail as to what the survival benefits are and how they might apply to plan members. Let's just start out with a basic scenario. An individual who's married, has children, who has a spouse and has children and passes away. What would the survivor benefits be for an individual in that scenario? Derek?
Sure. So death benefits are really broken up into two main groups. First one is, did the member die before retiring or did they die after they started their pension? So before retirement, basically the spouse, the estate, the children are going to get 100% of the present value of their pension, otherwise known as a commuted value. So that full value will go to those named groups.
So if I could just interject there, when you say the commuted value, is that a cash sum that they would receive as opposed to a payout, like an annual pension payout?
Yep, good question.
Okay.
Essentially, it's a lump sum calculation, and then, for example, for the spouse, they would have several options. They could take that full value, so let's call it $1 million, and they could take it out of the plan and invest it themselves, or they could start an immediate pension using that same $1 million on how much pension would that buy for the spouse's lifetime in the CAAT pension plan. Or they could take that $1 million and buy a deferred pension, which would end up as a higher pension if they decided to collect it later. So those are all the options. Lots of flexibility for the spouse to determine what's best for them at that time. Once you've retired, it sort of flips. So then it becomes a defined benefit pension plan for all intensive purposes. It's a pension paid for your life, the pilot's life, and then a pension paid for the life of your spouse. And here, it's whatever. So let's say your pension is $10,000 a month. Your spouse will get 60% of that, or $6,000 a month for as long as they live. We also give members the option, so instead of $6,000, so the $6,000 is no charge. So no charge, no change to your pension, which is very different from other pension plans. They'll actually reduce your pension to provide a spousal pension. In our plan, you can also choose to elect a 75% pension that goes to your spouse. So your pension will go down a little bit. So instead of $10,000, maybe it's $9,700, $9,800, and then your spouse gets 75% of your pension. So there's options for both pre-retirement for your spouse to choose what they want to do, and then there's options when you retire about how much pension you want to continue to your spouse. Desmond, you also mentioned children. So we do have provisions that if you have an eligible child, that's typically age 21 if they're no longer in the educational system, age 25 if they are in post-secondary, or if they're disabled and are financially dependent on you, then that would be for the rest of their life. So there are survivor benefits to go to those parties as well. And under no circumstances, once you've retired, will your payout to whoever you've named be less than 60 months or 5 years of the pension you have earned. And as I mentioned in the first episode, our board is actually looking at making that a longer guarantee period because the plan is so well funded.
Clayton.
Derek, you mentioned disabled children can get a pension. So let's say I die at 80, my spouse dies at 85, and at that time I have a 45-year-old disabled child. You said they get the pension. Do they actually get it, or does it expire once my spouse dies?
They will actually get a monthly pension as well.
So we could see somebody getting CAAT DB plus pension for 80 plus years in the disabled child scenario.
Absolutely.
That is significant. So Derek, in a lot of the literature about this about CAAT's DB program, it is referred to as a modern DB. I was wondering if you could just touch on how this quote modern DB works, so that its design, and how it works to protect the members and their benefits.
Yep, happy to. So when we talk about modern DB, it really brings the best of defined contribution and the best of defined benefit together. So the employer is happy with modern DB because it's fixed cost. So it allows them to offer a DB program at their workplace without it being on the balance sheet. So that's the best of DC, fixed contributions, and not on the balance sheet. Where members, pilots, are still getting defined benefit pension plans. So a pension plan that is not based on investment returns. You don't have to worry about interest rates. That pension is going to be there for you no matter what happens to your employer. So you're going to get 100 cents on the dollar no matter what happens in the investment markets and no matter what happens to WestJet in this case. So that's really modern DB, is having this jointly sponsored pension plan that is going to survive indefinitely into the future and be financially viable and deliver our pension benefits that we promised.
Okay. So what would you say to a pilot who already has their own financial guy or is doing their own thing? What reasons would you give to them to join the CAAT DB program?
Well, I think to pilots, I would say that this is a very unique opportunity where they can participate in a pension plan that has tremendous amount of certainty and value. As I mentioned before, as a not-for-profit pension trust, every single dollar that we earn must be paid out in member benefits. So there's no high fees that members have to worry about. There's no lack of access to great assets, like I mentioned before, private equity, infrastructure, real estate. So these types of opportunities are really a unicorn in Canada to have access to a predictable lifetime pension that has inflation protection and survivor benefits that we just talked about. So not many investment advisors will understand what a modern DB pension plan is. So that might be a bit of a lift for them. But as a not-for-profit trust, And if you look at all the different types of employers who've joined us, like the Canadian Institute of Actuaries, the Canadian Bar Insurance Association, so the lawyers, Conference Board of Canada, they've all done a tremendous amount of due diligence and figured out this was best for their employees.
So, Derek, in speaking to a lot of our pilots about this program and joining a pension program, some of the ones that are maybe a little bit older, in their 50s or above, they often say that, you know what, I'm not going to get any benefit from this pension because I don't think I'm going to live long enough to see the benefits of being in a pension plan, i.e. they all think they're going to die at 75 or 80 or something like that. Are there any statistics on the longevity of the average Canadian that might support somebody joining a plan?
Yeah, that's a common misheld belief by a lot of Canadians. We get that a lot at our member sessions, and I expect we'll get it when we do the live sessions later on. But the facts are quite contrary to that. So you mentioned somebody dying at 75. There is less than a 1 in 7 chance of that happening. You actually have a greater likelihood of seeing your 97th birthday than you have of dying before 75. So people always forget about protecting extra longevity, but the average Canadian will see their 90th birthday. So when you blend males and females together, it's roughly age 90 today, and that continues to increase as longevity improvements happen, so better medical care, etc. And what I'd mentioned to pilots specifically is that there's really robust data that says the higher your income, the more likely you are to actually have a longer life, not a shorter life. So I would expect, if I was advising pilots, that they should be planning something similar to the Financial Planner's Guide, which is assume you're going to live till age 95. So this is really the power of defined benefit pension plan. You no longer have to worry about longevity risk and the chance of running out of money. The average Canadian who has an RSP or a defined contribution plan, if they wanted to withdraw the same amount of money they'd be earning in DB+, they would be out of money somewhere between age 75 and 80. So this really protects members to make sure they have a pension for as long as they live and a pension that goes to their spouse as well, not to mention the inflation protection increases that we talked about earlier.
Well, again, tremendous amount of information, a tremendous amount of very useful information. Derek, again, I'd like to take the opportunity to thank you again for taking the time to come out from your very busy schedule and participate in these podcasts. Is there anything else that you would just like to say in closing before we move on?
Well, first of all, thank you. I'm very happy to participate in these podcasts, and I'm really looking forward to meeting a lot of the pilots when we have our roadshows later on this year, and I look forward to providing as much information as pilots need to make sure they feel more comfortable about joining DB+.
And we all look forward to that as well. Clayton, is there anything you'd like to say about next steps in this process?
Yeah, coming up, guys. The calculator is coming. CAAT will build a fully customizable calculator for us. You can put in your upgrade. You can put in if you want to go on the 787. So that'll be very specific to you as an individual. And in the fall, we're planning road shows. So keep educating yourself, bring your questions to the road shows, and make the right choice.
Yep, just to reiterate that, your job as the pilot right now is to continue to educate yourself to make the best decision going forward, just like you do every day at work.
Excellent. Dan, Clayton, thank you again for your tireless volunteerism. And Derek, thank you again for taking that time out of your very busy schedule to join us here on this podcast. Well, again, that's about all we have for today. As mentioned previously, keep your eyes and ears open for upcoming in-person roadshow events. We're planning to have them at all of the bases across our network. Until that time, guys, please remember, wear your lanyards, stay informed, make sure you read your communications. Most importantly, stay safe. Thank you again for joining us for this edition of PIREP, the WestJet Pilots Podcast.